Good morning. India has been setting global records for new COVID cases for almost a week. Over a million dead every 3 days, 50 since I started talking 12 seconds ago. But both local market indicators are up 1.5%. Those dying are poor, too poor to get into a hospital and invest in shares. The rich are flying off to wherever Indian airplanes are still allowed to land at a premium. Even Bloomberg sees the only threat as being that on oil demand, so for now the markets are safe. Let's break it down. U.S. indices pared losses on Friday, climbing towards the top of the 10-day range we've been seeing. The dollar continues down after April's services and manufacturing PMIs, as well as home sales for March, surprised nicely. Why? Well, because there's little chance that Fed Head Powell will announce a tapering off of bond purchases at this week's FOMC powwow on Wednesday. U.S. credit benchmarks are set to make a killing as the final curtain sets to draw on the London interbank offered rate, Libor, that standard by which all world banks set their rates until in 2008 it was discovered to have been manipulated. Barclays got a tap on the wrist for that in 2012, and U.S. Treasurer Timothy Geithner, he of 2009 bank bailouts, became the U.S. scapegoat. This afternoon at 12:30 GMT, durable goods goes on the block with 3 and 6 month auctions at 3:30 and 2 and 5 year bonds 90 minutes later. European indices ended the week in the red after rising on excellent quarterly reports from Nestlé, SAP, and Pernod. Currencies are up on excellent PMIs, save in Germany, where the manufacturing fell 2 ticks but has managed to escape the full point plunge pundits were expecting. Services and composite were both in the red. The pound-dollar pair could be of interest today. We certainly have enough data coming in for it. At the moment, we can see it safely in the upper band, the RSI well below overbought and upturning slightly. The pivot points are pretty close, and we're on the central at the moment, 139.67 to the north, 37.68 to the south. Crossing either one could serve as some sort of indication of a trend. In an hour, we'll be seeing Germany's business expectations for April. This morning, we're seeing some indecision in Asian markets after the yuan jumped by 2 pips overnight, apparently also on Fed rate expectations towards week's end. As we said, India's Nifty and BSE are booming as Blackstone makes an offer for Mphasis IT, and ICICI Bank and Reliance surge on quarterly earnings joy. Interestingly, ICICI's report to the New York Stock Exchange shows missed expectations on revenues and earnings. At 1:30 after midnight, we'll be privy to China's industry profit figures for March, followed 20 minutes later by the Bank of Japan's interest rate decision and core CPI at 5 a.m. Oil continues trending in an almost invisible 4-day uptrend after Friday's Baker Hughes count showed a 1-rig decline, possibly the only asset hit by the COVID surge in India and Japan. Bitcoin is back in the 50K region, snapping a 5-day losing streak as threats of taxes have U.S. investors speculating. Personally, I'd like to think we're still inside that channel. The RSI is already indicating overbought. Also, we can see that the volumes didn't speak quite so loud on this morning's jump as they did last week on that plunge. We'll just have to wait and see. In earnings Friday, Honeywell, Daimler, and Kimberly-Clark beat expectations both in revenues and EPS. American Express fell below badly on $9 billion revenue instead of the expected 9.2. And if you're wondering why, with all that red on the slide, did U.S. indices rise on Friday? Well, so am I. Tesla will be reporting today after the close of New York markets. We're expecting a 72% increase on revenues on record deliveries, especially in China. That region, though, is becoming less and less accommodating as local competition grows and all kinds of staged media events cut into the company's perceived value. Well, sun's out for some of us. A great trading week ahead. Enjoy it.